Why do most traders fail in trading? Is the market difficult? Is strategy not working? Or indicators are lie? No, reality is, most traders lose money because they keep repeating the same mistakes again and again. And if you do not avoid these mistakes, no matter what strategy you learn, your profit will not be consistent. So in this video, I'll explain the biggest trading mistakes that traders make, and most importantly, how to improve them. Watch this video till the end, because the last mistake is the reason why most traders blow their accounts. Welcome back, traders. If you're interested in trading psychology, option trading, chart analysis, Nifty 50, and real trading knowledge, then make sure to subscribe. Let's begin. Mistake 1. Trading without a plan. The first and biggest mistake, trading without a plan. Most beginners open the chart, see candles moving, and directly enter the trade. No entry plan, no stop loss, no risk management. BAS emotions could basis P trade, and this is gambling, not trading. Professional traders always have entry, exit, risk, and target predefined. Before taking any trade, ask yourself, why am I entering this trade? Where's my stop loss? How much am I risking? What is my reward? If you don't know these answers, don't take the trade. Improvement. Create a simple trading checklist before every trade. Trend check, support resistance, risk reward, confirmation. Discipline starts from planning. Mistake 2, overtrading. Second mistake, overtrading. Market main hard candle opportunity naihoti, but beginners think more trades equals more profit. And slowly, broker earns more than the trader. Many traders take revenge trades after losses. One loss, then emotional entry, then bigger loss, then account damage. Remember this. Professional traders wait. Beginners force trades. Sometimes the best trade is no trade. Improvement. Set a daily trade limit. For example, maximum 2 or 3 quality trades per day. If setup is not clear, stay away from the market. Capital backhand to be skill high. Mistake 3, no stop loss. This mistake destroys accounts. Not using stop loss. Many traders think market reverse Hojega, but market doesn't care about emotions. One big loss can destroy profits of many days. Small losses are normal in trading. Big losses are dangerous. Even professional traders take losses. Difference ye high. They cut losses quickly. Improvement. Always decide stop loss before entry. Risk small. Think long term. In trading, survival is more important than one big profit. Mistake 4. Following random signals. Next mistake. Blindly following tips and signals. Telegram, Instagram, WhatsApp, YouTube comments. Hard jaga 100% profit strategy. But reality? Nobody can predict market perfectly. If someone really had guaranteed profits, they wouldn't sell signals. You must learn to analyze charts yourself, because dependency creates weakness. Improvement. Focus on learning. Price action, market structure, volume, risk management, and psychology. Knowledge gives confidence. Mistake 5. Ignoring trading psychology. This is the most underrated mistake. Trading psychology. Most traders think trading is only about strategy, but real battle is mental. Fear, greed, impatience, revenge trading, FOMO. These emotions destroy discipline. Sometimes traders exit profit early because of fear. Sometimes they hold losses because of hope. Emotionally unstable traders cannot survive long term. Improvement. Control position size. Follow rules. Accept losses calmly. Trading is a probability game. Not every trade will win. Consistency matters more than excitement. Mistake 6. Risking too much money. Another common mistake. Big risk for quick profit. Beginners want fast money, so they use large quantity. One wrong move and huge loss. Professional traders focus on protecting capital first, because without capital, there is no trading. Improvement. Risk only small percentage per trade. For example, 1% or 2% risk. Slow growth is sustainable growth. Remember, trading is a marathon, not a lottery ticket. Mistake 7, changing strategies again and again. This mistake is very common. One loss, and traders change the strategy. Then another indicator, another setup, another course, and finally, confusion. No strategy wins 100% of the time. Even good strategies have losing trades. Improvement. Stick to one setup. Test it properly. Collect data. Improve slowly. Mastery comes from repetition, not from constantly changing systems. Final message. At the end of the day, trading is not about being right every time. It is about managing risk, controlling emotions, and staying disciplined. The market rewards patience, not greed. Most traders fail because they want quick success, but successful traders focus on process. So ask yourself today, are you trading emotionally or professionally? Because one decision can completely change your trading journey. If you found this video valuable, make sure to like this video and subscribe to the channel. Comment below which trading mistake affected you the most. And if you want more videos on trading psychology, NIFTY analysis, option trading strategies, and real market knowledge, then stay connected. See you in the next video.